Welcome to Thoughts on Investing. Wow, what a week in the markets, huh? It really felt like a roller coaster. We started the week climbing, even hitting some exciting new highs. But then, we hit a massive drop that left a lot of us feeling a little dizzy. So what exactly caused that huge reversal? Today, we're going to break it all down, the tech sell-off, the confusing signals from the economy, and what it all means for you. Let's make sense of it.
Okay, before we dive in, just a quick but super important reminder. This is all for educational purposes. We're here to connect the dots and understand why the market moved the way it did, but this is definitely not financial advice. As always, please do your own research before making any investment decisions.
All right, so here's our game plan. First, we'll look at the big picture of this volatile week. Then, we'll get into the specifics of the tech sector's big stumble. After that, we'll try to make sense of the mixed messages the economy was sending, see how that led to a clear shift into safer investments. And finally, we'll look at what to keep an eye on next week.
So, first up, let's set the scene. The week kicked off with a whole lot of optimism, but it ended on a really uncertain note. It left a ton of investors just scratching their heads wondering what on earth changed so fast.
And here is the final scorecard for the week. Yeah, as you can see, it was not a pretty picture. The Dow, the S&P 500, and especially the tech-heavy Nasdaq all finished deep in the red. This was one of the tougher weeks for the market we've seen this year. So the obvious question is, why?
You know, the week was really a tale of two different markets. It started with so much positive energy. I mean, the Dow actually poked its head above 50,000 for a bit. Investors were feeling confident, buying the recent dip in tech. But then it was like a switch flipped. All those gains just vanished under this wave of selling. And that confident mood, it became incredibly fragile, almost overnight.
So what was the main engine behind that big reversal? Well, that brings us right to our second point. A huge stumble in the tech sector, where all that anxiety around AI came rushing back.
Yeah, there's no question about it. Tech stocks were the epicenter of this week's earthquake. And because these companies are just so massive, when they start to fall, they tend to drag the whole market right down with them. And this wasn't just a little dip, it was a major sell-off that sent ripples everywhere.
So why the sudden cold feet on tech? Well, it was really a mix of a few things coming together at once. Those nagging doubts about the long-term profitability of AI started bubbling up again. At the same time, investors started taking a much harder look at the sky-high prices of these stocks and, decided that the recent earnings reports just didn't quite justify those price tags. And this wasn't just one bad apple. The pressure was felt across the entire sector.
Now this brings us to the third part of our story. And this is where things get a little weird. We got what seemed like really good news from the economy, but the market's reaction was surprisingly bad.
This is the million-dollar question that had everyone confused this week. We got fresh data showing that inflation was cooling off, which is usually fantastic news for the stock market. So why on earth did the market sell off?
Here's the paradox in a nutshell. The good news? January's inflation numbers came in cooler than expected. Awesome. But here's the catch. When you pair that with the still strong job market, it basically signals to the Federal Reserve, hey, no need to rush to cut interest rates, and right now the market is desperate for those rate cuts. And you can see the impact of that thinking right here. Coming into the week, there was some real hope floating around for a rate cut in March or April. After this week's data, poof, those chances shrank in a big way. The new consensus has pretty much shifted everything back, with most people now betting that the earliest we'll see a rate cut is June. And that delay is what really spooked investors.
Okay, so with all this uncertainty swirling around, how did investors actually react? That takes us to our fourth section, a very clear move towards safety as the market's fear gauge started flashing bright red.
And hey, you don't have to take my word for it. This quote says it all. Goldman Sachs has this indicator they call the panic index, and this week it spiked to a level they literally call max fear. That tells you investors weren't just being a little cautious, they were actively running out and buying protection in case things got worse. All that fear triggered something we call sector rotation. It's actually a pretty simple idea. When investors get nervous, they pull their money out of the riskier, high-growth stuff, like tech this week, and they move it into sectors that are seen as more stable and defensive. It's kind of like trading in your sports car for a reliable minivan when you see a big storm on the horizon.
And this chart here, it shows that rotation happening in real time. You can see the money flowing out of that underperforming tech sector and into areas that tend to hold up better when things get choppy.
Sectors like energy, utilities, and consumer staples, the companies that sell things we all need no matter what the economy is doing, they all did much, much better. Okay, that was a heavy week to get through, so let's wrap this up by looking forward. What are the key things we all need to be watching on the road ahead?
Two big things are on the horizon. First, we've got key earnings reports coming up from major companies like Walmart, which will give us a really good pulse on how the consumer is feeling. And second, we have more big economic reports coming, including fresh inflation numbers and housing data. You can bet the market will be watching those like a hawk.
So what's the big takeaway from all this? In a market that's this jumpy and sensitive, the message seems pretty clear. It's time to be selective. The days of just buying anything with a tech name and watching it go up seem to be on pause. Right now, it's all about focusing on the fundamentals, companies with strong earnings and real data, rather than just chasing the latest headline.
And that's our breakdown of a pretty wild week. The big question now is whether this was just a quick panic attack for the market, or if it's the beginning of a real shift away from tech dominance. Only time will tell. If you found this useful, do me a favor and hit that like button and subscribe so you don't miss our next breakdown. Thanks for joining me.